In this video, I'm going to show you a scalping strategy. A scalping strategy that lets you predict tiny moves in the market with very high probabilities. And therefore, you're able to make quick wins. $100 here, 200 there, 500 there, sometimes within seconds. This is a strategy that other people will most likely charge you thousands of dollars for. And it's going to be 100% free. I'm going to do this and I'm going to show you everything to build trust. I don't expect you to believe me. I want you to test it out for yourself. See if this works. If I'm bullshitting here or if I'm actually telling the truth. And you will see that I'm telling the truth. I will show you examples. I will show you how it works, why it works. And without further ado, let's get right into it. So, scalping. What are scalps? Scalps are basically quick moves in the market. So instead of going in a long trade here and trading all this way up here, no, what you want to do is you want to get in and out of the market quickly. So this is a 5-minute chart right here. So what might happen is you go in here and you exit here. You go in here and you exit here, okay? You go in here, short, exit here, okay? Just very quick moves, especially when the market is not open. This is pre-market, obviously. You can see if you're in the US, this is about 5:10 Eastern time. So it's very early. And this is a move that I will now predict. I will now predict that the market, once it passes this low right here, the 97s, it will go somewhere to the 92s or 93s. 20 ticks only. Quick scalp. But 20 ticks with one contract is $100. With 10 contracts, it's $1,000. And this can take, like I said, seconds. And you will be able, after this video, to predict moves like these. Quick moves. You can see here, from the 21s to the 24s. Quick moves in the market. You'll be able to predict these. You will be able to predict moves where you know with high chances that if you go in long here and you go out of your position, meaning you take a profit here, that about 80% of your trades will actually work out. It's beautiful. So the key concept that you need to understand is liquidity. What is liquidity? It's very simple. And I'm going to draw this out for you. The market moves, not like how people tell you the market moves. Actually, let me start a little differently. So, what you can see here on the right-hand side, and I'm going to make this a little bit bigger for you. Here on the right-hand side, you can see an order book. Now, what is the order book? The order book is basically showing you the bids and the asks. Imagine you are on a market and you can purchase cars. Okay, cars are always a good example. For example, you have a BMW 3 Series. Okay, that's the car that is in the auction there. You have a bunch of people here, a bunch of people who want to buy the car at these low prices here, because the cheaper it gets, the cheaper they get the car, obviously. And you have a bunch of people up here from this level to this level who want to sell the car for as much money as possible, right? So if you see that 12 people, 14 people, maybe 9 people are willing to sell the BMW M3 for this certain price, if 9 people actually bought that car, supply and demand, what happens to the price? The price should go up, right? Okay, cool. Now in trading, it's exactly the same. If we see that on the order book, we have 5 contracts here. Once we bought 6 contracts here, the market, the price will go up. That is how the market functions. It's an auction, okay? Very simple. Now, sometimes if you have a big player, and big players can be anything from institutions to banks to hedge funds, it doesn't really matter who they are or what they are. They want to build huge positions in the market. So for example, if you have a big player, or if you are a big player, and your boss, if you're a trader in a bank, tells you, hey, we need to buy 1,000 contracts at the price of, for example, 400, okay? He needs to buy 1,000 contracts somewhere for an average price, guys, of roughly 400, which is this level right here. Okay, so in this range, on average, he needs to buy 1,000 contracts. Now the issue is maybe 500, maybe 200, it doesn't matter. It's just an example here. The issue is, and you just saw the order book, we only have a couple of orders here, right? We don't have that many contracts available at that price, so you can build up a position of 1,000 contracts. So if you were just going to buy 1,000 contracts here at this level, what happens naturally? Well, the price goes up, right? So you cannot build a position of 1,000 contracts at this price at any given moment. What he needs to do is he needs to spread out that order. He needs to spread it out and split it across multiple orders. Okay, first concept. Second concept is, where do you believe? Is he going to be able, he or she, I don't care. Is he going to be able to get as many contracts as possible in one go? Very quickly. Where? Well, I can tell you where. And if you've seen some of my videos, you should be an expert at this already. If you're not, then make sure to watch these videos. What is this right here? What is this? This is a recent low. Now imagine you are a trader, a retail trader, someone who just watches some YouTube videos like these, and you still believe in support and resistance. If you're one of these people who still believes in support and resistance, this will be your awakening. Because what happens here? Well, if you are a support and resistance trader, and you will see this all day, every day. And this trade, guys, I hope we get here once more, because this will break out to the short side for a quick scalp. It will do that. So maybe it doesn't happen in this video. Test me, guys. Test me after this video is done. In case we don't see this happening in real time, test me. Today is the 3rd of September. Okay, this is 5:20 a.m. and I predict that the market will break this low and go here for a minimum of 398 to roughly this area. So shortly 390, 393, somewhere in this area, about like 20 ticks. I predict this with high probability, 80% chance of happening. That's how confident I am. If I'm not right, call me out in the comments. I don't care. But if I'm wrong, if I'm wrong, call me out. If I'm right, let me know as well. So, what is here below these lows where there's support? Well, a bunch of guys went long here, right? Because trend is going higher, so it's all bullish, right? It's all bullish. The market makes a small pullback to this area and then goes back up. So a bunch of people somewhere bought here, they bought here, and now even more people bought here because support held up, right? So if they bought here, where are they going to sell? Well, it's a long trend, right? So they're going to sell somewhere here, most likely. Break the high of the day, right? Guys, if they bought here, where are their stops? Where are they? Right below this level of support, right? Okay, once we know that, we can take this to our advantage. We know that big market participants, going back to concept 1, want to buy up as many contracts as possible in as little time as possible without moving the market themselves. And if we know that, and we also know that here are a bunch of stop orders now, and they can just buy them all up in one go. 1,000 contracts, 500, 200, it doesn't matter how many. They can buy them all up without moving the market up themselves. What do you think is going to happen? Well, just logically speaking, I predict that a big market participant somewhere here starts selling a bunch of contracts. Why? Because by selling a bunch of contracts, the market will go below this level of support, right? He then buys back these contracts that he bought here for a quick profit, just a tiny profit, few ticks only. However, because there's so many stop loss orders here, so many stops, guys, what do you think will happen? He's now able to buy his original goal, his original position of 1,000 contracts. It doesn't matter how many in this area with one go. So he makes a tiny profit here. He builds up his huge position in this area, and then whoop, the market shoots up. Now, this scalping strategy works on higher time frames, but also on very short time frames, and I will show you that in just a minute. But for now, what you need to understand is every time there's support and resistance, the market wants to sweep this liquidity. It's also called stop fishing, and you can profit from this stop fishing. Tiny moves, quick scalps, quick trades, in and out within seconds. And I'll show you this in real time now. So when I tell you that the market will most likely break out from here, because there's liquidity here, guys, I predict that the market wants to break this low and then move higher. Because right now, check this out for yourself. The market is trading in this range, right? So we have the high of the range here. We have the low of the range here. And we have huge amounts of liquidity here. So if the market is able to break out below this low for a short moment, liquidity here, the market will just shoot through this area, and you can just literally go in here. You set an order right there. So all you have to do, guys, is you lean back. Okay, you lean back, and the market can also do that right now. Just to give you a perspective of how many times this happens. What you can do is you can go in here, and you can just say, hey, I want to sell using a stop order. I want to sell 2 contracts, 1 contract. It doesn't really matter how many here. So once the market breaks through this low, I want to get in, and then you set your take profit at, for example, in this case, the 92s roughly. So shortly above this liquidity. So you go in for a 20 tick scalp, and this will happen. It will happen. Okay, guys, it will happen because it happens all the time. And I'm going to show you this in real time. So the market is now here. Do we have a bunch of liquidity above right now? Not really. We have this tiny liquidity here, but not really. So I don't predict that this will happen. I actually do think the market will turn around here, but this is not the strategy. The strategy is finding areas of liquidity and taking advantage of that. So let's actually remove this drawing because we will come back to this. And we can see this for ourselves. Every time we trade in a range, it needs to be a range. We can make sure that this works. So for example, up here, what is here, guys? Resistance, right? And what happens once the market goes to this level of resistance? And by the way, this is a perfect level. Do you see these? I need to move this a little bit higher. Do you see these highs here? How many times has resistance held up, giving retail traders confirmation that this is actually the level of resistance? So they're very confident in their trades, right? But once we break this high, the market just shoots up. So that was at 3:45 a.m. in the morning. 3:45 was this situation actually. 3:45, most likely, let me just get the level here, at 3:65, right here. So you see the market. This is so beautiful, guys. So beautiful. Right here. This was the high, right here. The market couldn't break this high at all. But what do you see? We have resistance now at this level, right? And what is above this resistance? Ta-da! Liquidity. And what does the market want to do? It wants to grab this liquidity because it's fuel to the fire. Liquidity moves the market, and it's also a magnet to the market because big market participants can build huge positions at these levels of liquidity. So whenever you see a level of support or resistance and there's liquidity nearby, the market, once it breaks out of that area, is very likely to go towards this level of liquidity extremely fast. So what do? Order right here. Once you break this high, you get in at the 367s and you get out shortly above this level of liquidity at the 378s. Guys, that's about a 40 tick move. $200 with one contract in 48, about a minute. One contract only. And you can do this all day, every day, because it happens all day, every day. Because you can just do this. You can do this so many times. Every time you see a range, you see lows or highs forming, support and resistance forming. You can trade this, guys. You can trade this. For example, here, what is forming in this area right now? We see this high. We had this previous level of liquidity. The market went back to this previous level of liquidity. So we now have a range, this low. And what is below this low? Liquidity. So once the market breaks out of this low, somewhere here at the 98s, if it does it. It hasn't yet, unfortunately. That was the situation that we were just in. The market will go here. That's what I predicted before. Guys, now, what do we see? Just live in action. For us, no trade setup yet. Nothing. Okay? Because that is not the strategy. The strategy would be valid if we break above this high. So if we break above this high, somewhere here, then you have room from the 31s or 32s to about the 40s. Just quick scalp. And you want to get in and out of your trades quickly. So once the market moves, you want to set your stop loss either to break even or you trail it. Okay? Very tiny moves. So for example, you get in here and you see the market move. Oops, that was too quick. And I'll show you a lot of examples in just a second. I just want to explain this as well as I can right now. The market breaks above this high. Boop, we are in. The market goes against us for about a couple of seconds. Then the market comes in. And as long as the market structure is valid, meaning we make higher highs and higher lows, this is perfectly fine. Here, the market structure breaks for a second. So this will be either your first exit or this obviously at the goal will be your second exit. But once you see market structure breaking, meaning we go from higher highs and higher lows to lower highs and lower lows, at that point, the latest, you want to set your stop loss to break even. Okay? But this would have worked out perfectly. And this exact situation, guys, happened multiple times today already. Multiple times already. Okay? It's picture beautiful. What is here at this level? Take a look at this. We have this high right here. These highs here. Resistance. Resistance now becomes support. Guys, all the retail traders, you know this. Support becomes resistance and resistance becomes support. And what's at levels of support and resistance? Boop, guys, liquidity. So at 315, we can check what happened. This was the level. Right here, that was the level at 40. See? Here at 40, that was the level. Right there. Didn't even need to look at the charts. Because we can see, if we zoom out a tiny bit, there will be lows here. I'm sorry, right here. My bad. Boop. Here's the low. 336. The highs here at 336. The lows here at 337 roughly. So that is our area right here. And once we break below this area, what do we see below? Surprise, surprise, we see liquidity. So what do? Stop order here, get out here, tiny move, and a tiny profit. And the cool thing is, you can go in at any given time of the day, and you just identify where are these levels of liquidity right now. So right now, it's very obvious, right? Right now, we have liquidity here at these highs, resistance, and here at these lows, support, right? So once the market breaks either the high or the low, and you double check this, for example, in Bookmap, and you can get access to Bookmap for free actually. There's a bunch of YouTube channels that are streaming Bookmap basically. Just type in Bookmap live streaming, for example, and you'll see a bunch of dudes. And you just want to double check, hey, if we actually do break this high, is there some liquidity above? Because you need that liquidity because the market wants to go there. And if that's the case, for example, right now, it is the case. You go in and you go out. These are very quick moves. So you just go into your charts once. You identify these levels at any given point. Any given point. Can be during the night, during your workday. It doesn't matter. You set your orders here and here, and then you're done for the day. Set your stop losses, set your take profits, and you're done for the day. Quick scalps all day, every day. You can do this in the Nasdaq. You can do this in ES, CL, for example, the crude oil futures, because guys, this is so beautiful. Oops, sorry. This is so beautiful. And it's not difficult, guys. It's not difficult. What happened? Guys, what happened? Take a look at this. What is this? Support. It held up twice, once here and once here. What is most likely below this level of support? Liquidity. So what happens once the market goes through? Now in this case, it was a huge move. You cannot predict these huge moves, to be fair. However, what you can predict is a short move. You get in here, you get out here. Just a tiny move. Maybe 5 or 10 ticks. It doesn't really matter. And that's your profit. And like I said, you can do this all day, every day. Because where did it happen previously? Look at this level right here, guys. High here, resistance, right? Resistance, resistance. Boop. You get in here. Once we break above this level, quick scalp to the upside. Let me draw once more. Quick scalp to the upside. So you get in here once it breaks at like 50 and you get out at 53, 54. Quick scalp. And if it doesn't move higher, no worries, because you get out. You are predicting quick moves. Like I said, this works in Nasdaq. Let's actually double check this. What's happening right now? So at the same situation, it works for the ES. Obviously, exactly the same situation as the Nasdaq. So you can actually put orders in right here and right here, obviously. So once the market goes there, you want to profit from this, and you don't even need to sit in front of your chart and trade. You prepare once and you're done for the day. Very easy, right? You can also do this for gold, GC. High probability setups, guys. Why? Well, what is here? What is above here? Above this level? This is the high of the day at that point, right? So if you exclude everything that you see here on the right-hand side, what is right here? That's the high of the day. What is above the high of the day? There's liquidity, guys. Here, guys, what is below this level? The level of huge rejection where the market moved away from significantly. What is below there? Liquidity. You get in, you get out. Guys, you get in, you get out. Quick, small, tiny moves. But they add up. Because if you do 5 or 10 of these moves a day, and you just profit $100, $200, $500 every single time this happens. Trading doesn't have to be complicated. Trading can be easy by understanding what's actually happening. Because once you understand what is happening, then you can profit from these situations. And obviously, not every trade will work out. That is more than obvious. However, there's a high likelihood of this working out, because that is how the markets function. And I didn't want to promise you guys too much, but we can now see if this happens in real time. I'm obviously going to look very bad now if this doesn't work out, but it might. So you're now in a trade, right? You're now in. Right here, you're in. Where's your stop loss? Well, most likely somewhere here. So a 1-to-1 risk reward, right? Probably. Okay. Now the market seems to move a tiny bit. We're going. You can move already your stop loss to break even if you want. If you're very risk averse, right now it's a bit early to be fair, but you could do that. I don't care. Depends on your risk tolerance, obviously. Some people are more risky than others. And then you just want to see what happens. You just want to see what happens. Once we have a break of structure, and where's the break of structure? Well, recent lows were here, right? So once we go below these lows, the market structure is not valid anymore. So you don't want to see that. What you do want to see now is a break of this high. Because once these highs break, we have a bullish market structure. That's what you like to see. But for now, it hasn't done that. We just wait. Recent low here. Low here, low here. So the market structure is still valid. And if it doesn't happen now, it's fine. Here's your stop loss, your break-even stop loss right here, okay? At the 32s. So you're still in the trade right now. You might get stopped out now, but it's just the way it is. And we can just watch this in real time now, see what actually happens, if this works out or not. Test it out for yourself, guys, by the way. 80% chance of winners, 20% losses roughly. That is what I'm seeing. I'm not making any guarantees, no income claims whatsoever. Guys, please test it out for yourself. I don't want to promise you anything and then disappoint you. But this is 100% working. It's a free strategy that you can just use. I'm not charging you anything. Like I said, I'm not making any guarantees, no income claims whatsoever. Test it out on your own. Trading is risky and you should know that, obviously. But most people are gambling anyways when it comes to trading. So why not use a strategy that at least makes sense? Because this strategy makes sense. Why? Because it's based on logic, guys. Based on logic. Okay? That is how it works. You get in and you get out. Somewhere here now. There's liquidity here and here. So you do want to get out. At this point, you do want to set your stop loss to break even. You should still be in your trade because the market didn't go to our level of entry. And you just watch it. You just see what happens. You can obviously fast forward a little bit. You don't have to wait with me here. But you're already in the green for a couple of ticks. 12 ticks or something. Not a big move yet. You just get in and out. In and out. 5 contracts, 10 contracts, 2 contracts. It doesn't really matter with how much size you're trading. It doesn't matter. All that matters is that you have a high probability setup. You limit your losses and you maximize your profits. And you limit your losses by setting your stop loss to break-even positions when it makes sense. And guys, that could be your exit already. And that is your exit. Did I promise you guys too much? Did I promise you guys too much? I don't think so. I do not think so. Beautiful. Beautiful. So now that this trade is done, you obviously remove these drawings. And it's moving now, guys. You still have this level, right? So this level is still valid. But for now, you're 1 out of 1. Do 1 trade a day. Make $500, $1,000, $200. I don't care. No income claims. I don't care. Do whatever you want. But this strategy works day and night. Guys, it is 5:40 a.m. Eastern time right now. Eastern time, guys. And the market just made this move that you can potentially profit from. Other people charge you thousands of dollars for this. I give you this for free. Imagine what else I know if I give this away for free. Trading doesn't have to be difficult. Trading can be simple. It's not easy, but it can be simple. Once you understand, like I told you, how this works. I hope you like this video. Don't believe me? Test it out for yourself, guys. Test it out for yourself. And you will see how beautiful this strategy is. Without further ado, wish you a great day. And I'll see you guys in the next video. Bye-bye.